Welcome to the latest edition of CrystalCast, where we go behind the headlines and we take a more in-depth look at the specialist finance industry. Bridging finance is an area which seems to divide the financial services community. Some brokers love it and see it as a great solution for their clients. Others look at the reputation it used to have and maybe see it as a product of last resort. Take a listen, I hope you enjoy the content, and as always, if you are a fan, please click on subscribe and stay tuned for more future releases. And as always, all the information provided is for the use of financial intermediaries only. Okay, so today we're joined by Richard Deacon, Sales Director at Masthaven. Good afternoon, Richard.
Good afternoon.
How are you?
Very good.
Excellent. Thank you for taking the time to speak to us today. If we can start off in traditional CrystalCast fashion, can you give us 3 surprising things about you?
So I did think quite long and hard about this and asked my colleagues. I even went on to Google to see if there was anything about me, because there isn't actually that much interesting about me, Chris, unfortunately. the couple of things that I have written down that aren't that interesting are, if I was born a girl, my name would have been Muriel, which is quite bizarre.
It is.
I've never watched Game of Thrones, any of the Marvel films, or any of the Harry Potter films. I was a Wicklewood Shield winner in '93, and for those of you who know, you know. And finally, this is the 4th one. As a Chelsea fan, we talked football before we went on air. My personal opinion is that Eden Hazard is one of the most overrated players in the Premier League. And that might surprise you by the look on your face. It has surprised you. And I could spend all of this podcast talking about why I think he's overrated. Is he a good player? Undoubtedly. Is he one of the best in the world? No. I don't think he holds a candle to the likes of your two boys, Salah and Mane. I don't think he's in the same postcode as the Messis and Ronaldos of this world. You look at someone like Son at Spurs, you look at even like a Jesse Lingard, a Marcus Rashford, a Paul Pogba at United, who've had a poor season, but they've got similar amounts of goals and assists. And for one, when Hazard's on song, I think he is wonderful. He's beautiful to watch, but he has far too many games where he's anonymous. That's why he's not one of the best players in the world. That's why we should bite Madrid's hand off if they offer us anything near £100 million, and that's why he's overrated. Well, there you go.
There you go. Let's see how controversial that is out there. Yeah. Excellent. So into the detail of this then. So you've spoken recently about education and how that's a key for brokers. Is that an area of focus for you and for Masthaven?
So I'm a big advocate of education in the industry, certainly, but certainly amongst brokers as well. Experienced guys like yourself and other specialist distributors and packagers, education is mainly, I think, an internal thing. You know, you've obviously got Harriet working for you now, who was with us a while ago, and Harriet's knowledge is fantastic, and she's brought that to Crystal, and that can then be filtered through within Crystal, and also the brokers and people who use you directly. As a lender, I think it's so difficult, because whilst we can look to educate the Crystals of this world, that's great, but we've got that relationship with you anyway. The education that I think is sort of most important is for, and I'll label them the common or garden broker, who may not know who Crystal are, who may not know what specialist lending is, but they'll come across a situation in their broker lifetime where they'll have a downsize or a chain break situation that they don't know what to do with. And for someone who's worked both in the regulated and non-regulated, the specialist and the mainstream, I used to be at Santander for my sins, and I've worked for a packager as well back in the day, to not have that knowledge, to let that customer slip from your grasp without a relevant product to help them make that chain up or to downsize effectively, I think is just it's upsetting for the customer, because they can't get what they want, but also as well for the broker, being blunt, it's an income stream that they're missing out on. Mm-hmm. And the fact that they don't know about it, or it may be perceived in a poor light with regards to the cost, I think is something that it does grate with me, and something I do bang on about constantly in things like this, and talks I give and articles I write, because education is the key to success in any world. You know, it's in enhancing your products that you can give your customers, and therefore they're making your job easier, because you can make your customers' lives easier. Rather than just saying no to a mortgage, you can say no to a mortgage because of this reason, Mr. Customer. However, there is an option for you here that will get you what you want. It's called bridging finance. Let's talk about this. So yeah, big advocate.
So what would you like done about that? What would you like to see happen in the industry?
So a number of years ago, the Association of Bridging Professionals mooted a bridging exam paper akin to that of CMAP, and a great idea. Nothing ever came of that. FIBA under Adam Tyler's tutelage has now, I think, taken that mantle over, and the latest meeting I was in with Adam, we did talk about an educational exam surrounding bridging finance. I think was the specific topic, but also specialist finance in itself, with invoice discounting, asset finance, development, etc. For me, I think it would be difficult to get a standalone exam, especially if it's non-mandatory. We did talk, myself and the other lenders in the FIBA meeting, that it could be an idea to put it within CMAP. Adam has many fingers in pies with Whitehall and the government, and he said, I'm remembering that I think he said that he could look to see if that it could be included in the CMAP, because you have CMAP 1, 2 and 3, broker passes that and they can advise on mortgages. If there was a section in there, maybe 10 questions on specialist finance or topics on specialist finance, bridging I would suggest being the primary one, because I think it could help the broker in their day-to-day life, but also on the wider market as well. If it ever came back into the high street banks, the high street banks could look to offer bridging finance, as they did many moons ago, and the high street bank operatives would have to know about the short-term finance. And if it's a section within CMAP, I think, you know, why not? Let's do it. You could get bridging specialists to write the paper or write part of the paper to make it real, to make it knowledge gaining, as opposed to just having it in there as a tick box.
Yeah.
Because if you have it as a tick box, I think it doesn't serve its purpose. Education after CMAP is effectively non-existent, other than the CPD that people have got to do. But is that really gaining a knowledge, or is it just ticking a box for compliance? But yeah, that's what I'd like to see. If we could get it within the CMAP, that'd be fantastic as far as I'm concerned.
You made an interesting point about perceptions of bridging. People often dismiss it as being an expensive product or an unsuitable product. I was at a round table recently with a number of insurers, and they were looking at providing PI insurance to valuers, and their view of the bridging market was 2006, 2007. They were still ringing up the Toyotas and Chevals of the world, and I think outside of our area of expertise, there is a completely different view of bridging finance. And I'm sure once people start digging, they can find more information, and we've got a series of webinars and things like that people can look at. But the emphasis is really on the broker to go looking for it. So I think that's a really good point. If we could do something where it's almost given to brokers and take that decision away from them, it's going to make the market a much better place.
It doesn't surprise me what you've said, but it really does upset me that there's an awful lot of people out there who do think about the olden days of bridging. I won't say good old days, but the olden days of bridging, as you say, the Chevals and Toyotas and, you know, the few others who aren't with us anymore, the Davenhams of this world and the Link Lendings of this world. Everything is cyclical. You look at adverse credit, for example, you look at the Bank of England base rate, you look at house prices, and I believe bridging is cyclical. I've been at Masthaven now 11 years, and you know, when I joined back in 2008, it was very much, you know, those guys were around, you know, they were our competitors. Regulation wasn't a big thing within the bridging market, purely and simply. We became regulated 2010, and pretty much since 2010 the aim was to grow and get a banking license, become a bank, etc., etc. But there were some lenders out there whose practices, were spurious.
Yeah.
The fees being charged, the hidden fees that were there were, bizarrely for all to see when it came out in the wash. Lenders lending way above the risk curve just to try and get money in the bank, as it were. I mean, we looked sadly enough at Amicus recently. That's not really a hark back to those days, but of a similar ilk. They were high on the risk curve, weren't particularly cheap, but they were high on the risk curve. And the classic saying is anyone can lend money out. The difficult part is getting it back in.
Yeah.
If you're lending high loan to values on some less than prime real estate properties, you are surely in the lap of the gods with a small shift in market, a small shift in consumer thoughts with regards to, I don't know, warehouse conversions or HMOs or whatever it may be. Generally speaking, they're on the up, these sort of things, but if you get the wrong one in the wrong time in the wrong area, you can make a loss, and that's what a lot of people did. But going back to your sort of point, it really is the educational piece. You're saying that these guys were thinking back to the olden days, 10, 12 years ago. Well, who's done anything to change their perception is what we're saying, isn't it? And
yes.
Is it the lender? Is it the broker? Is it the client? Who is it? Whose job is it, if you will? Is it the media's job? I don't know, to change people's perception. The answer is probably all, everyone does their own bit. But until you can do such thing that it will change those people's mind, and I would suggest as well, the people thinking that haven't really touched bridging within the last 10 years. Yeah. So why would they think any different? If you don't touch or look at anything for 10 years, your mindset is, well, it's like it was when I last had a look at it. So it's going back to square one and going back to how many times have these people said no to a deal that they can't do for time constraint reasons or income reasons or credit reasons or property condition reasons where a bridge could work, and I would suggest they would have had at least one in the last couple of years.
Obviously, Masthaven have now got their banking licence, as you touched on earlier. How has that changed things?
Quite a bit. As I alluded to earlier, I've been at Masthaven 11 years, and when I started in 2008, there was, I think, 4 of us or 5 of us in a serviced office in Lombard Street, and there's now 178 or something like that.
Wow.
It's grown exponentially. We've been a bank now for 2.5 years, which is great. I still joke that when I come into the office, I sit next to my team and I ask who certain people are, because there's new people start every week and I've no idea who they are, which is my bad. But if I'm only in here once a week, I try my best to say hello to everyone. We've got new premises on the go as well in Covent Garden. We're moving in, I think, July to larger premises, which will obviously come out in the press and stuff, purely because I think those offices hold about 220, 230, and we want to all be together, whereas at the moment we've got this office in Soho Street and another one literally over the road, where we've taken a floor there because we grew so quickly, but we all want to be together again and make it happen. The recent investment from Varde, the American investment firm, was a great boon to us. It obviously means we're doing something right. It means that we can leverage more money for bridging and development, as well as obviously the long term, the residential and the buy-to-let and the second charge mortgage side of things. So the grand plan is working very well. Sometimes still can't believe we're a bank, because it's weird, Kris. I've dealt with you guys for probably all of those 10 years in fairness, but it is weird that we are now a bank, but it's really good. The new changes that we'll be coming out with shortly with our products and the whole of market stuff, we're going to be some of the cheapest bridging rates out there, which a few years ago I always dreamed about having the cheapest rates, because my goodness, as a salesman you want the best products to sell. So yeah. But yeah, it's just been an overused phrase, but an absolute game changer.
And again, you touched on the fact you've been in the industry 10, 11 years now. What's the biggest change that you've seen throughout your time?
I don't think there's been one major change. You look at a couple of things. What we're doing today, for example, technology. How's technology changed bridging in the last 10, 11 years? Yes, of course it has. But has it changed it massively? There was a couple of 3 years ago, maybe 4 years ago, a few firms were trying to do a sourcing system for bridging, akin to sort of 27 Tech and Mortgage Brain Trigold. That never really has taken off massively, purely and simply because bridging is so unique. There's not one simple tick box. Bridging, and a lot of people's adverts are bridging isn't tick box, purely because of the vagaries of the bridging market. So you can't really shoehorn bridging into sourcing systems. So what else has changed? Certainly the pricing's changed, of course. Pricing's gone, south of 0.5%. I mean, when I started it, we were 1.25% per month, and that was competitive.
Yeah, I remember those days well.
It was really competitive. Some guys were 1.5%, 1.75% per month, and they still got plenty of business. I like to think that, I know we've just talked about it earlier with regards to, isn't that much in the broker's forefront, but I would say from 10 years ago to now, bridging is more than what it was 10 years ago. So 10 years ago, bridging primarily was used as the day one back-to-back remortgage with Mortgage Express. Obviously doesn't exist anymore, and so the likes of ourselves and other banks and regulated lenders, I think, have got into the regulated bridging side of things, certainly for, as I said earlier, the chain break, the downsize, the capital raise, the second charges, the self-builds. Although we're one of only few who do the self-build stuff, it is still regulated, of course. And I think that's become a bigger usage of bridging than many people think. There's, again, quite a few indexes and information packs out there from certain lenders and brokers and conglomerates of the two. I can only obviously comment on what we do, and we do, the majority of our business is regulated. Now, is that something that we've sought out? No. Is it something that we're known for? Yes, it is. Quite why, I don't know. Maybe because we made a big song dance becoming regulated 9 years ago, because it was a big thing for us, and in the industry it was a big thing as well. And since we've become a bank, I guess you're looked at more of a regulated lender because you've got bank in your name, as it were, like our competitors. So I guess that the broker would gravitate to you as opposed to, clearly a non-regulated lender, but a non-bank lender for their regulated facility. But I think in general the overall perception of bridging has got better, although clearly from what you've said it's got a long way to go. I think the rise of guys like yourself, of Crystal and other specialist distributors, has been, a big part of that has been bridging. There's, I would say, probably 10 top specialist distributors in the country, who are probably the 10 biggest providers of bridging finance to lenders in the country. If you're a broker who has little or no knowledge of bridging, you would go to someone like Crystal. If you are a broker with a little bit of knowledge, you'd probably still go to someone like Crystal. And if you're a broker with loads of knowledge, you might still go to someone like Crystal, because you can get, generally speaking, the same remuneration, which, let's be honest, that's why we all get out of bed, and you get the same level of service, if not better, because the Crystals of this world have that, relationship with lenders where they can say, oh, can you look at this one as a priority, or can you do me a favour on looking at this, or whatever it may be. And because of that relationship, the lender would generally gravitate and say, yeah, we'll have a look at it, yes, we'll prioritise you because we know you give us good business, good quality business. So all the brokers, unless their absolute model is bridging, would benefit by going to a specialist distributor who knows about bridging. So, really long-winded answer to your question, but I would suggest in those 10 years, the specialist distributor model, shall we say, as I say, the Crystals of this world, have increased A, their knowledge, but B, their market presence so much that yes, you'll still do the buy-to-lets and the inverted commas normal stuff, but your own specialisms, which include bridging and development, commercial, etc., have come to the fore, which again can only be good for the consumer.
We've touched on it again in the last two questions there, but where do you think the opportunities currently lie for brokers?
One of the big things in Masthaven that we're looking to increase is our development finance, both regulated and non-regulated. If you look as not a global market, but a global industry, and look outside of the industry in fairness, and the whole housing market situation, we hear stories all the time about developers who've got planning permission on something or other because the council have said, yes, we need housing quick. If you want planning permission on this disused post office or disused, I don't know, hotel or whatever it is, yes, you can have it because we just need housing, we need it quick. So I think the country's needs for housing have filtered down into the broker industry that we all fish in. As a lender, we would be folly not to look at doing more development finance. It's a reasonably scary product because having done bridging forever, first question you always ask the customer is, what's our security? And security is main residential house or a buy-to-let. And you think, okay, lovely, it's a bricks and mortar house, I can view it on Street View or whatever, and it's lovely. All right, might need a bit of a refurbishment on it, but we're happy with that. With development, you're often lending on mud and grass, and that mud and grass has an intrinsic value, and within the first month or so, that value's actually gone down because all you've done is dug a couple of bloody great holes and stuck some concrete in. So it's to get your head around development finance is quite tricky, but if you work with people, if you work with good surveyors, if you work with good brokers who know what they're doing with regards to the clients and the client's experience and the contractors doing the builds or looking to do the builds, it's a very profitable deal for all concerned. So the biggest opportunity I see is development for us. Not many other lenders do ground up development. Certainly our competitors in the space don't do an awful lot of ground up. So that's where our number one opportunity lies.
And what trends are you seeing alongside that currently?
I would say the biggest trend, and funnily enough it concurs with, I think it was the MT Bridging Trends article that came out recently, and that's on refurbishment. Mm-hmm. I think their stats showed that it was 30% of all bridging loans are now for refurbishment. Again, it kind of concurs with the thoughts that I said earlier. A lot of people do want new houses, but if they're not available and they can't move into their new houses, they will look to do refurbishment on their own houses. Whether that's a simple kitchen and bathroom, whether it's a side extension, a side and rear extension, a loft conversion, changing the windows, the doors, etc. Maybe making a 4-bedroom house into a 6-bedroom HMO, that sort of thing on the landlord investment side of things. For us, we see more and more and more refurbishment inquiries, and you've got to draw a line, I think, between refurbishment and minor development or light development, if you will. Refurbishment for me, and it sort of goes with Masthaven's thing, is if you've got an envelope of a house, a footprint of a house, and you're not doing anything structural to it, then that's refurbishment. If you're then adding, you're taking out the back and you're putting on a back extension and a side extension, there's going to be some point where it's open to the elements for obvious reasons.
Yeah.
And does that involve footings? Does it involve planning permission? It will involve open to the elements at some point. And for all that it's a small chance, there's always a chance that something could go wrong halfway through, and our security has gone from this lovely, perfectly normal house to something that's, it's not wind and watertight, it's open to the elements, etc. So again, talking about risk, which for sales guys is difficult to do, but I try my best. You've got to take that into account. So that for me, where there's major extensions or, roofs being gone into the loft, etc. That for me is more the light development or minor development, and of course you've got your ground up as well. So, but listen, that every lender's different. Every lender's different on the risk curve. But for me, it's the refurb is the trend that we're looking for, or we're looking at as well.
Yeah, we're seeing that with a number of other lenders as well. There's now a huge array of refurb products, lending for costs, doing a bridge and then going straight into a term loan, things like that.
Yeah.
So I think there's more opportunities for brokers in there. So maybe that's alerting them to doing more business in that space. So it's just a trend that we're seeing as well across the market from brokers. So following on from that, where do you think the market will be in 12 months' time?
Again, thought quite long and hard about this question. I think the quick answer is I don't think it'll have changed that much, and I'll tell you for why. If you think back to the start of the year, we're now middle of May. If you think back to the start of the year, I think most guys had, lenders and brokers, had a reasonably poor February. And the reason for that was Brexit. We were hanging our hat on, from memory, the end of March, thinking what's going to happen. There's a lot of scaremongering about. There was a lot of people downing tools. There was a lot, hypothetically, there was a lot of people saying, do you know what, I'm not going to look to move house. I'm not going to look to raise funds. I'm not going to look to renovate my property because this Brexit thing could be big. It could blow everything out of the water. I could lose my job. I could lose my income. Let's just see. Obviously, we know what's happened now. What's happened now is we're no further forward from where we are, and I think if we're being blunt, no one really knows what's going on too much. And certainly within the last month to sort of 8 weeks, really 2 months, it's almost been well, do you know what? Brexit doesn't look as though it's going to happen, and we don't really know what's going to happen. So let's just crack on with things. Let's just crack on with that house purchase. Let's just crack on with that refurb or that development, because if we wait, you've gone a year and nothing's happened. So within the next 12 months, what would have happened? Well, Brexit may or may not have happened. There may or may not have been a general election. And I think that's what I hang my hat on with regards to the question mark in the next 12 months, because if there is a general election and everything stays as it is, then fine. I don't think that would be much of an issue. However, if there is a change of government, it would, by definition, start panic bells ringing, not for any particular reason that it was a hard left Labour government coming in or whatever it may be, but purely and simply because it is a change. And whenever there's a change, either in the offing or a change that happens, it's indecision again. Labour have come in and taxed this and house prices that. No one knows. Everyone goes back into their shell again. And until the dust settles, which would probably be 3 to 6 months after an election, that's when you can go back to normal again. I think you'll see more lenders coming out with a developmenty refurby product, as you alluded to, Kris, earlier. In the grand scheme of things, I don't think there's going to be any huge changes because of the Brexit / change of government question mark.
Again, a little bit earlier on, we touched on technology.
Yep.
What part do you think tech has to play in the bridging market in particular?
So, touched earlier about the sourcing systems that never really took off, and I think for prime deals, good chain breakdown, size, clean credit, property in good condition type of deals, you could get away with a sourcing system there. That could work, although there are even quirks in that as well, especially if it's a refinance as the exit vehicle. But what we're looking at is on the refurb side of things, and potentially on the development side of things as well, is using tech to potentially negate the use of monitoring surveyors or further surveys along the line when works have been done. And for a quick example, on a refurb scheme, so customers bought a property and it's uninhabitable, needs new kitchen, bathroom, etc, etc. So we get the schedule of works from the customer. The surveyor goes out there day one and says, yeah, you're buying this property for, I don't know, £500,000, and it is a bit of a flea pit. You do need kitchen, bathroom, windows, heating, floors, decoration, whatever. So you get the schedule of works, and then why do you need to send a monitoring surveyor or the same surveyor back to do a re-inspection when this work has been completed? Why couldn't, for example, the client Skype or FaceTime a underwriter at Masthaven and walk them through the house as a, right, we lent you the money to do your kitchen, your bathroom, this, that and the other. Well, I'm going to walk you through the house. We're going to go through the front door, new front door, for example, and you go through each room, make sure it's been decorated. You can ask them, can you just go left? Can we see the windows? Can we see the joints? Can we see the seals? Can we see the outside if you've done landscaping? Can we see the drop curb that's been put in? Can we see the tiling? Can we see? So, I know a few lenders have done video calls with their clients, and we've done a video call with a client once as well when they were abroad, and you think this tech is available to us. It's on every one of our phones. We can call our mates, or generally as lads, if we're away, we speak to our wives and children on it. But why don't use this as a tool to negate the need for a quantity surveyor, not maybe so much on development, certainly on a refurb, but monitoring surveyor, for the cost, B, the time, and see what does that guy do when he goes out there. He has a look around, he talks to the client. Well, we can do that without anyone going out there, so it saves time and money. And I think in life in general, saving time and money is going to be fantastic, and if you can do it via use of tech, why not?
Yeah, really interesting point. I've got a bank account with one of these online only digital banks, and I had an issue with the password earlier, and to do the password reset you have to send them a video of you saying, my name is Kris Corns and can you reset my password?
Oh wow.
And then they run their security checks on that and send you a new password through. So as you say, this technology exists and it's there and it's being used, and that would be a really good solution for customers if that could be implemented. Yeah,
it's something we're looking at. Obviously from a compliance perspective we need to do everything right, but I think that could be a big step. But for anyone who does it, it's not obviously us who'll do it, but I think that could be huge.
Yeah. Excellent. And again, traditional CrystalCast style, last question, if you could make one change to the industry, what would you do and why?
I want to be controversial, Chris, if I may.
Okay.
If I could make one change in the bridging finance industry, it would be that all bridging lenders, or all lenders who purport to be bridging lenders, are regulated. And the reason I say that is I think the whole industry should be regulated anyway. We are in the business of lending money to customers for personal use or business use generally. I think those are the two main ones. The argument is, if you're lending to a company, it's not regulated. Correct. If you're lending to a company on their work premises, why should that be regulated? And my answer is, you're still lending against security. You're lending against generally real estate, but also commercial property. Plus, one of the reasons why I think bridging sometimes historically has got a bad name, and sometimes even to this day still gets a bad name, is there are some lenders, in inverted commas, out there who still charge astronomical rates, astronomical fees, but possibly wouldn't even class themselves as bridging finance lenders, but they are categorised as such because they lend sometimes family money, or if you will, conglomerate money at ridiculously high rates with penal fees, but because it's a short-term loan for 12 months, for example, they're classified as a bridging lender. Now, you or I, or people we know would never go to these specific lenders, and again I would use the inverted commas on those, because we know in the industry that there are numerous other lenders that we can use. There's again, I don't want to go sort of too, I'm certainly not going to name names on air, but I'm guessing a lot of people who are listening to this will know 1, 2, 3 or 4 lenders akin to this, where it's very, very high interest rates, very high in rates or arrangement fees, and also still charging exorbitant exit fees. Again, if you go over term of your loan, you're charged penally with regards to fees and daily interest, and those guys, few and far between, and their pot of money is probably 5, 10, 15, 20 million a year, but they've got the money, some of it is family money, and they lend it out under the auspices of bridging finance. For me, it isn't bridging finance, and that's why I think bridging finance lenders should be regulated by the FCA to keep it with all in-house, as it were, and then the other lenders are almost called something else. I don't know what, private lenders or private lending or something like that, because that for me tarnishes what is a good name. Bridging finance market is something I'm proud of working in, proud of working for Masthaven, proud of working with brokers like Crystal, and that's what I would change if I could.
Brilliant. Richard, it's been an absolute pleasure. Thank you for your time.
Pleasure talking to you, Kris. Thank you very
Brilliant.
much.
Thank you. To hear the rest of the series and be notified first of future episodes, hit subscribe. And to discuss any of the topics covered in today's CrystalCast or any other specialist finance requirements, call us on 01827 301070 or visit our website at www.crystalsf.com. Thank you to today's guests, and as always, thank you for listening.